Hey guys, welcome to our 66th episode of Blockchain Banter Trading Crypto. I'm here with Keith Allen, order book analyst, TA and algo trader, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. How are you guys doing? I know we weren't able to get together last week, but hopefully the last 2 weeks have been enjoyable for both of you.
Been busy, been good, no complaints.
Good. And you're in Florida, and you were still all clear from everything that was going on there.
Yeah, I was in the in the little area to the southeast that was spared. So we were
Good.
very, very lucky.
Good. Okay. And Mark, everything going well on your end?
Busy as usual, but everything's going well.
Good. Okay. So I guess we'll just kind of, I would say pick up where we left off, but where we left off was, Keith, you were running some simulations using Carbon DeFi, which again, thank you for doing. That was actually really fun to see it. You know, someone else who has never used that, kind of back testing some of these strategies.
I actually played with it for a little while after that, and it actually helped me kind of fine tune the range that I was trading. So I think it's a really, really cool and compelling tool.
That's very cool. So it's not just, Mark, you're muted. It's not just for on-chain traders then, because you don't trade on-chain. So anybody, even if you don't, it's not like you have to connect your wallet or something like that in order to use the simulator.
Right. I haven't made the step of going full DeFi. And connecting my wallet and doing it that way, but you can still apply the data whether you're trading through the platform or not. That's probably the next step for me is to maybe put a little bit of capital up there and play with it just to see small amounts.
You know what? It's baby steps, right? I mean, I think for everybody who's getting into DeFi, I mean, diving right in is wonderful, but I mean, it's kind of intimidating. I say that, and I've been in the industry for, 5 years now. Mark, that's kind of cool to hear, right? So Keith, even though he's not like on-chain trading and DeFi and everything else, is using the simulator just as a trader, an experienced, trader using your simulator.
Very validating.
Yeah. Okay, so Keith, really fast, you're probably not surprised that we have not broken through the 69. I was going to joke with you, because you've been saying this whole time that it's not going to be easy for us, right? So
yeah, there's obviously a lot. The heaviest liquidity is at 70K in terms of resistance, and we have higher highs that are technically more important for us to take out, up around 71.9, 72K. And then obviously the all-time high up there, 73.8 or wherever it is. But I have maintained since March, when we first started engaging with that prior 2021 top, and we had that brief pump that got us to an all-time high, which still I think that was the wild card or the curveball that hit the market, and people didn't really know how to react to it, myself included. And we just, had to kind of watch things grind here for months and months and months. And that level at 69K, which was, as I mentioned, the 2021 top, has really been a formidable resistance level. We've just not been able to flip it really at all. There's been, out of the, it's been like 7 months now. Out of the 6-7 months, the number of candles that have engaged with that level on the daily time frame, there's probably less than half a dozen of them that have actually printed above that 69K without any wicks below. And I always listen. You see those wicks above, and it's good because it's clearing out liquidity. But those wicks below always, to me, anyways, I interpret as signs of weakness. And it's hard to, for some people to fathom, okay, how can there be weakness if we're pumping up above 70K or above that
I was
level?
going to say, yeah, explain that.
It's the strength of the move, right? And so all moves are not created equally. And if we, I guess we could start out on the candle chart and we can, I can illustrate what I'm referring to. So yeah, when you see price pumping above, yeah, that seems like a strong move. But when the wicks, are constantly, wicking below, that to me shows that it's not necessarily as strong as we might hope, right? So always been looking for those full candle bodies above, and there have been very, very few. Here's one out of that back in March. And then, actually there were two, and then we got that wick below. So we really thought things were going to pump, and then things broke down, a bigger breakdown, same set of circumstances. Very few candles actually printed fully above. This is obviously on a daily time frame. So, on the weekly level, it's not all the engagement isn't quite as visible, but we certainly, all the rejections, I guess, aren't as visible because it doesn't happen as many times. But you can see on the weekly time frame, just none of them, right? Nothing on the weekly time frame has closed above that. So let's get a weekly close above that level, and then we can talk about what happens next. I've felt all along that these big giant green candles, they're awesome to see, but you expect them to get retested, and this one finally did, right? We got this wick down here. We never got those retests down to this 40 to 45K level that you remember we thought was going to happen for so long, or even down to this 25 to 30K level.
Question.
Yeah.
Really fast. That wick that you said that we see, the retest, is that sufficient? Is that good enough for you or like Mark, you too?
Does this count as a retest to 50K?
Yeah, are you sold on that being the retest, or do you expect it, do you expect us to see it again?
Well, what I like about this, there's a couple things I like about this. I like that it one went down to this 50K level. It actually went below that 50K level. It was to the low to mid 49s for openers. Number two, it did bounce from the 50-week moving average. And then we got a retest here of that level. And you see this line here. And this is what really pulls it together for me. If you recall, when we were talking about the death crosses,
right,
and looking for recoveries from the death crosses, and I had showed back at the time the history of double bottoms coming out of those death crosses, like we saw here and we saw here, et cetera, et cetera. And I'm not just talking a single death cross, but we had like multiple death crosses in a short amount of time.
I think it was like 4 or 5 we
right.
saw in that short amount of time.
We had a lot. And so if we look at this on a line chart, and I encourage you guys to get a different look from time to time, because it does change your perspective a little bit. On a line chart, that's a perfect double bottom. So not only did we get the engagement with the 50-week moving average, we got the double bottom out of it. So
it's
I like that.
sufficient for you.
I like that very much. And now a series of higher highs. And on the daily time frame, now you can see that we also have a series of golden crosses, right? Death crosses are, all these crosses, all these moving averages are lagging indicators, right? But the death crosses, those were that quick series, obviously bearish indicator, whereas golden crosses are bullish indicators. Right. And so we first had the 21 day, crossing above the 50 day. Then we got the 21 day crossing above the 200 day. And this one really is an important one to me. And now we have the 50 today, the 50 crossing above the 100. So these are bullish indicators. Doesn't mean we can't go down. You can see after each one of these crosses, right? Price went up and then it came down. Price went up and then it came down. And so I'm okay with this price action. I'm okay with the fact that we didn't just shoot through 69K. In fact, I'm glad we didn't shoot through 69K on the first attempt. I think, building above this 2021 mid-cycle top is a good thing. But we may not hold this mid-cycle top. What I'm most concerned with is these moving averages, and especially on the weekly time frame. To me, that 21-week moving average, you see we have some nice confluence here for the past several weeks. It's almost been flat, right? And so this looks like support to me at high 62s. As long as we hold this, and even if we went down to the 50-week and just continued this series of higher lows, I'm okay with things. What I don't want to see is making a lower low. And if we do make a lower low, look where that gets us right now.
I was going to say, you just said that we hadn't retested those lower points, right?
So if we were to go retest this, that brings us right to the trend line, which to me is the mother of all foundational support levels, right? Boom. So this is back in November 2020. This was the FTX crash. This was that really that final consolidation at 25K before things really took off for us this year. And so this would be, in my opinion, a gift at this point if we went down here, or even potentially down lower. But I think what's happening now is this is just another attempt to shake out. I've heard all of the chatter about price pumping because of the presidential election, because people think Trump's going to win. Well, if people think Trump's going to win, and that's the reason for the pump, then why didn't we just shoot through here? Right?
Yeah.
To me,
we're always trying to find that catalyst or make sense of it, right?
There's gonna, in my opinion, there's going to be a knee-jerk reaction to whomever wins the election. And I think it's largely believed and understood that if Trump wins, then there's going to be a pump. And if Harris wins, there's probably going to be a pullback. But I think that after the dust settles and we get into 2025, Bitcoin's going to go back to doing what it does. And if we get a rapid Trump pump, I would expect an equal and opposite reaction in the other direction once things settle down. So, I don't trade the noise. I don't trade the chatter. I don't speculate on who's going to win the election in terms of where I'm trading. I'm just looking at these levels. It's as simple as that, right? And this was a clear rejection from 69K.
Yeah.
Doesn't mean not ever, just means not now.
Another question. This one's for both of you. Keith, you were saying that when we pumped initially, right, that it caught a lot of people off guard, yourself included. Now you're saying that there's going to be some sort of a knee-jerk reaction, whatever happens with the election. How do you guys play these specific moments, or when you were caught off guard?
That's a great question, and
how should others maybe approach this? In your best advice?
That's a great question, and there's really a huge difference between whether you're trading, you're day trading, trying to generate daily income, or you're building a longer term position for for the future. And if you're building a longer term position, and I'm doing a little bit of both, but I'm mostly interested in that longer term position. I have a little bit of capital set aside for trading, but I'm mostly interested in building that position and improving my cost basis when I can. But I will tell you that it's getting harder and harder to do. It's getting harder to call these perfect tops or bottoms. And I did, like the other day I was out and I had some family stuff to do and I couldn't sit here and watch and guard my trade. So I just, I was like, let me take my highest entry, and I'm going to put on a trailing stop loss. And if it dumps, it'll close. I'm in profit. There's no such thing as bad profit. And I'll be okay with it. And so that's what happened. So did I get closed out at 69? No, not so lucky. I got closed out way lower, but still in profit. In hindsight, I think I'm done doing that for a while, because what I'm doing now is I'm taking the capital that I freed up and I'm looking for bigger dips to buy. And so if we get this pull back to this 21-week moving average, I'm buying it. if we get pulled back to this,
That
50,
21-week moving average is at what?
it is currently at, I'll tell you exactly where it's at. It's going to vary a little bit, depending on what exchange you're on, but it's at 62.7.
62.7.
And and guess what? If price goes down further, I'm not worried about selling the little bit that I buy here because I'm just doing it in incremental bits, right? To dollar cost average my way in. Then I'll buy this. And if we go down here, I'll buy this. And I'm fine with just dollar cost averaging through. Yes, it's a very big range. But my cost basis for, the remainder of my stack is down at this level. So I'm okay. I'm in profit either way. And
Right.
I think that, I'm in jeopardy of having this breakout without having my position built. So I'd rather, for me personally, in terms of my longer term position, I'd rather dollar cost my way down a bit further, dollar cost average my way down a bit further than try and snipe every one of these levels because I keep getting, I'm telling you, I keep getting burned when I do it. So not burned, so I'm losing money, but burned where I'm not getting a better entry after those orders close. So it's getting
You're
harder and harder to
adjusting
get
your
that better entry.
strategy then.
Yeah. And so in terms of trading, there's other breakout there, especially with alts, there's a lot that's poised for breakouts. And so I'm sizing some of those up as well and looking for those opportunities to, see if I can generate a little something with some of those other coins. And, and I'm staking a little bit because with coins like ETH, and you guys know that I'm very much into Bitcoin and not so much into alts but I do see the potential for a lot of upside with some of these other coins. So I'm willing to put some capital, push some chips across the table. My ETH position is underwater, but I'm staking it. So, I think that eventually it's going to find its way back to green. And so I'm happy to just stake it and not worry about it and just let it go. Obviously I wouldn't do that with everything, but that's one that I think fundamentally will at least right itself. And I'll pick up a little more ETH along the way. In terms
Mark, go ahead. No, I was going to ask Mark if he wanted to add anything to this, especially speaking about alts and things, because I know he watches the alts. And then I have a question for both of you in that regard also.
Yeah, I think that in general, one of the mistakes that people make is what people will sometimes refer to as buying at resistance, right, or selling at support, right? It's just another way of saying that your objective is to buy low and sell high, not the other way around. And so when things are at resistance, it's a bad idea to purchase at least a large amount of it. Of course, there are things like breakout trading, which kind of waits for what traders will call confirmation, meaning that there's a justified reason to believe that something is beginning a powerful rally, that kind of stuff. Yeah, and that's slightly different. But when something is stalling at a given technical level, it's generally, I think, statistically speaking, a bad idea to buy it at that point. And that's kind of what Bitcoin looks like right now, right? It's rubbing its face on this resistance level. And I agree with what Keith said. When it comes back down a little bit, and it doesn't even need to be that far. It does look like this is coiling up a little bit. So it doesn't need to be that far. But buying it at a resistance level is, I think, a mistake. And Bitcoin looks like it's at a resistance level to me. On the other hand, interestingly, for Ethereum, it's much closer to support levels than it is its resistant levels. And so Ethereum has a similar trend line to Bitcoin, where you can draw basically a straight line beginning in June of 2022, which has been a sort of an upwards sloping support line. The last time that was touched was October 2024. And we know that the double top that Ethereum made back in March and May was at about like $4,000. And Ethereum today is sitting at around 2,600, which is pretty lackluster. And at the same time, if you have a look at Ethereum's, the oscillators on Ethereum, its MACD is turning back around and momentum is shifting the other way. And its RSI has also like dipped below, quite significantly below the 50 level, came all the way back down to 38 and has then turned around and started moving back up again. So technically, Ethereum looks like it's in a bullish reversal state.
And what
which I'm
time
sure.
frame what time frame mark are you seeing that RSI?
Oh yeah, I do everything on the weekly. Let me share. I just realized that we're
You know,
doing
because
everything
one thing that
backwards.
I'm looking at here, before you put your screen up, is we also have resistance at the 21-week moving average for ETH.
Oh yeah,
Um,
it's valid.
a death cross occurring between the 21 and the 50, and we have this downtrend line, which is kind of our local resistance. You see, that's perfect confluence between the trend line and that 21-week moving average. So,
For
and
sure.
you're just referring to a breakout. This might be a mini breakout if we could get above this, but the real one would be to make it above this trend line here, right?
Yeah, exactly. Yeah, that's totally valid. And I was to be clear, I was looking at so yeah, you're talking about the resistance line dating back to sort of May of this year, so around 20th of May, where it made that sort of the last of the, like that second of the double top before trending back down again. But that those highs, so the one from May and the one from March, are approximately equal to the highs that it made back in May of 2021, September of 2021. And again, Ethereum had a slightly higher, traded slightly higher during sort of November of 2021, but I kind of ignored that. I didn't really trust the ETH price back then. So you're right. Like with respect to this year, yeah, that should be noted. There is another resistance, another technical resistance level that we need to get out of.
And
But
this
yeah,
is like right around that 3K mark.
right around that 3K mark, exactly. Yeah. But yeah, in terms of its macro support level, um, from like where I'm measuring it to is down to about 2,342, which is only like $300 under where we are right now. So yeah, Ethereum is being squeezed between these different resistance levels, but its support level is also pretty close. Now the risk here is that if you buy at support, of course people claim, and there's a joke in cryptocurrency that some people buy the dip and it just keeps dipping. And Ethereum is certainly threatening to do that. I'm by no means an ETH maximalist. I'm not advocating for sound money or anything like that. It is possible. If Ethereum breaks this macro support level, like I said, at about 2,300, there really isn't much market structure beneath us. And I think we've said this, or Keith and I have both commented on this a few weeks ago, that really, if we come beneath it, there's not a whole lot of significant support levels beneath us. I think the first one is at the peak in January of 2018, which is around the 1,300 level, and then after that, it gets pretty bleak.
What about the liquidity? Sorry, we're talking about the support levels. I'm curious. We always look at the market. I didn't mean to cut you off. We don't have to do it right now. But when we're talking about different support levels and things, you can kind of see the liquidity shifting accordingly when we look at fire charts. I know we're able to pull that up, Keith, right? Because it's on Binance.
Yep. I'm
I don't mean to put
trying
you
to
on
get
the
there.
spot, but
Yep.
just kind of curious, because I'm always curious what the liquidity is saying, what the order book is saying. And Mark, I didn't mean to cut you off. Unmute and keep going.
Sure. Yeah. So all I was saying is that this is sort of building on something that Keith was just mentioning, which is that the alt markets, there are always these periods in the Bitcoin cycle. If you subscribe to the 4-year cycle or not, it doesn't really matter. But yeah, historically, there's always this kind of blip in time where the altcoin markets do some interesting things while Bitcoin is doing relatively nothing. Not necessarily the Bitcoin's capitulating or anything, but that it gets boring to trade. Volatility tends to dry up, and and it stagnates for a little while. And during those phases is when altcoins tend to sort of bounce off these significant support levels and continue higher. And it just looks like Ethereum is at least flirting with that idea for now. But this is by no means me advocating for that type of gamble, because as I just said, I do think that if Ethereum continues much lower than it is right now, that it could continue, like it could begin a very bearish downtrend for Ethereum that I don't think that Bitcoin is going to see. So yeah,
Well,
it's interesting.
you can see here on fire charts, you got quite a bit of ask liquidity above, keeping price in check. We've got some local support at that 2600 level, a little bit more at 2550. And in terms of, some confluence with technicals on that, this box here is the golden pocket between the 0.5 fib and the 618 fib. And that's a retrace from the November 21 all-time high down to the swing low in June 2022. So the fact that we're above this golden pocket is good, right? In terms of strength of where ETH is trading. Obviously, we got to get past these resistance levels, like Mark mentioned, but the top of this box is right at that 2550 level that I just mentioned. That's pretty well correlated right here. So this is what you have, holding price above that golden pocket right now. Here and here, and this would be the top of the golden pocket.
We see that
also,
break, and go ahead, Mark.
That said, it's also important to recognize and recall what Keith was speaking about. I think around this time last month, when we were examining the performance of the ETH ETF versus the Bitcoin ETF, and just that in general, like there seems to be a lot of interest in the Bitcoin ETF and not a huge amount in the Ethereum ETF.
Yeah, and that has continued, especially the last, let's see, 1, 2, 3, 4, 5, 6, 7 trading days. There's been some really, really big numbers of Bitcoin ETF inflows. By contrast, ETH, well, they've had at least a few positive days, but the numbers are nowhere. Good. I mean, it's not even in the same.
Not even the same ballpark. Yeah. They're completely different instruments at this point.
No,
so yeah, it's
in fact, I have to change this back to big. If I keep this on ETH too long, I start to feel dirty. So I'm going to change this back to Bitcoin.
Let's get back to Bitcoin then. I won't ask you about the other alts that you guys.
No. I'm kidding. You can continue on ETH or any alts you want.
While we're looking at the fire chart for Bitcoin, that's a pretty significant sell wall sitting right there at 70K, right? At least statistically compared to the rest of the
I mean, at that single level here at a lower lower time frame, it's about 47 million. Where it gets interesting for me, last week, you see all these blocks of bid liquidity that moved up, and then they moved up, and they moved down, and they kept jockeying. None of them got filled. Right? You notice this? I'll take off this tag tool so it's not in your way. Right? Didn't get filled. This got a partial fill, and then it got replenished. Then it moved back down, didn't get filled. Moved back down, didn't get filled. And we saw a series of these movements pushing price. I call this liquidity herding, right? They didn't have any real intention of getting filled. But they did, at least not getting filled down here. Perhaps their intention was to get filled up here, right? But they succeeded in pushing price quite successfully. And now you see, like, this was the last block. And these were all similar, if not exactly the same size blocks, by the way. So that's why, the fact that they're tip to tail and they're the same size is an indication that it's the same entity doing it. And so, then they pulled back down and then down again. And so this to me is attempting to draw price back down to this level And we are, again, like I said before, I don't know if that mid-cycle top, which is right here, basically, I don't know if this is going to hold or not. And the reason I have some concern, if we zoom out here to a higher time frame, gosh, my internet is just choking today. I don't know what's going on. Usually it's my kids streaming stuff and, but, so, I know you guys remember how many times we've talked about, the brighter spot wins the battle, right? And we waited for a long time to get enough liquidity to push price up. We had this nice ladder here, and now we have, overhead, a considerable amount stacked in that 69 to 70K level, and not a whole lot below, right? I mean, there's liquidity laddered all the way down to 38K, but none of it is like concentrated in one spot. And that's what it takes to push price. So what I'm hoping to see at some point in time, and preferably sooner than later, is that, right? Remember, we got this back in early September, and I said, hey, it's finally looking like we're getting enough to push us up, and it did. Now we need to see more of this bid liquidity moving up, concentrating above this 60K level, really concentrating above that 21-week moving average if we want to hold that, right? So at the moment, we have a decent ladder here, but it's not super dense. There's about 100 million right here in this range between 65 and where we sit right now. So that's significant for one exchange, but it is, I want to see a big bright block, that gives me more confidence. So I don't think that we're penetrating through this until we get some erosion up here, right? And you can see in the past we have had that erosion because some of that ask liquidity moves down, some of it moves up, moves through the range, and so it's very likely that when the market is ready, when they're really ready to make this move, that either we see a larger concentration of bid liquidity coming in near the active trading range, and or we see some erosion up here that makes this easier to penetrate. And by erosion, that could mean that some of this ask liquidity drops down into this range and gets taken out level by level, or it could fade its way up, which would be better for the guys trying, if somebody's trying to make more money, why hold it down? They're holding it down because they got shorts that they're protecting. That's why. So any of those things could come into play. And of course it could also just get pulled altogether. So
Keith,
those
you
are
think
the things that I'm
between
watching.
that,
What's that?
between that liquidity at 70 and then that liquidity that we saw moving, the ask liquidity moving down, pulling that price down, you think that is more so like the chances of us moving in that direction are going to be a little bit greater than breaking through at this point, especially with the resistance we've seen.
Like we've seen in the past, right? Remember, we had this all up here and it started to come down.
Yeah.
Right. You see where it started to drop down. So we could see that, for a long time, I've been saying, and this is speculative, how much I don't like to speculate, but I've been saying that I didn't think this move was going to happen before the election. And then last week when we started seeing this pump, I was like, well, maybe it could. I don't know. Maybe. Who knows? And this is why I just prefer to look at the charts and look at the and look at the technicals and look at the liquidity, because we can speculate until we're blue in the freaking face.
Right.
I mean, I saw Druckenmiller on something this morning saying that, well, it looks like the market's baking in a Trump win. Who the fuck knows? Right?
Well,
I don't even know. I don't even know what that means at this point. Like, are they baking in a Trump win to the downside or to the upside, or
to the upside? It was all to the upside. It's to the upside.
Yeah.
Why? I mean, none of the polling is reflective of the reality of what the fuck is happening and what the guy is saying. So, there was an article on Cointelegraph last week talking about the fact that this Poly Market poll that everybody is all excited about. Guess what? It's being manipulated.
Well, okay.
It's based on bets. Okay, it's based on the betting odds. Well, do you think that that the orange guy has the resources and the allies who can pump those bets to make it look like it's favorable for him? And do you think that if and when he loses the election, he's not going to say, well, this is rigged because look at all the polls. All the polls had me winning by a landslide. All the polls that you pumped.
I know you two are not Trump fans. I am, so I am biting
I'm sorry, did I emulate that?
I am biting my tongue because you're saying that
you're in
Trump
Arizona. Whatever the fuck happens in Arizona, who?
let's not.
By the way, Elon, I signed your petition.
Let's not turn this into a political debate.
Wait, did you sign a petition to get paid from Elon?
No.
That's also illegal, by the way.
Freedom of speech and the right to bear arms.
Well,
nothing to do with the vote.
Right, but that's not going away.
Well, Mark's right. Let's not get into politics. We'll have another call, and it'll be blockchain banter.
We'll do another one where we do technical analysis on the poly market for Trump, Kamala Harris. It's like I think that would be fascinating.
Okay. So going back to this, then question about you guys trading the alts, because we'll move on from Kamala and Trump in the election, but. My question, when Bitcoin is not as interesting to trade, right? And you guys are looking at the alts. Keith, I know that you were saying that you have your ETH staked. It's just there. You're looking more so at the accumulation of it through staking, right? The rewards that you're getting. When you're looking at other alts, right? I know we mentioned Litecoin at one point, XRP is fun for some to trade. Are you trading this and then, profiting, like taking profit, USDC going into a stable coin and then putting that back into your BTC accumulation?
Yeah,
Are you building any sort of significant bags in the alts, or it really is? It all just comes back to.
I do have a little bit of ETH, a little bit of Litecoin, and nothing significant in others at the moment. I am playing a little bit with Matic, or formerly known as Matic, Polygon, and a little bit of Solana, and the Solana and the ETH and the Matic actually, I'm trading on Coinbase, and those I can stake. So I'm staking those. And the other thing about trading on Coinbase is my USDC also. Anything that's not in a trade is earning 5%. So I'm good with that.
Yeah. So just accumulation at this point.
Yeah. And basically trying to build, accumulate more powder to buy more Bitcoin.
Got it. Okay. So it is going back to Bitcoin. Mark, what about you? Are you trading alts at the moment?
Always.
Yeah.
Yeah. So I pay attention to a couple of different pairs. So I was trading, I still am trading things like chains that I know well and like what their layer 1 token is. So things like the Say token, things like the Celo token. Obviously, ETH is something that I trade fairly regularly.
Keith, I'm going to bring Mark's up real fast. We'll come back to Litecoin. Okay.
So yeah, I do. I do trade these things. Like I've always got them, and so I feel like it's nice to to be trading them and doing something with them. Even if I sometimes I lose, sometimes I win. Let's say like on a long time frame, I'm still relatively positive, so I don't make like terrible decisions. But not all of my decisions are good. There are some layer ones that I did lose money on this year, but that's okay. It's not too big a deal. What I wanted to show you is this is the price of ETH in terms of Bitcoin, and like it is in like a fairly commanding downtrend that's being fairly.
And it broke out of that channel that you had there.
Even broke down, yeah. And remember that this is the channel versus Bitcoin that I've been talking about from time to time because it's been so reliable. From 2022 when ETH touched the top of this channel, you sold it. And when it got to the bottom of this channel, this isn't even the I was resizing this when we were talking, so give me a sec. It was something like this. So, it's dipped below this channel a couple of times, or at least flirted with, breaking out of it. But yeah, selling ETH here and buying ETH back here, and when it's kind of getting to the top of this thing and when it's getting to the bottom, this has worked relatively well, trading ETH back and forth between TBTC or WBTC. And then it kind of broke out. So like I did make a, conceivably a bad trade here. But because of the consistency of this channel over the last 2 years, it wasn't too bad. So even though I'm now, fairly long ETH at a much higher price point, at like 20% higher than what it currently is, I don't mind too much. But what's interesting
if you were
is
buying low and selling high throughout that whole channel, there's 1, 2, 3, 4, 5, 6, 7, 8, 9.
there are a bunch of touch
10.
points.
Yeah, I mean,
and I'm
12 to 15
really
different touch points that you're able to actually accumulate
Yeah,
and build a significant, a bigger bag than you initially would have, right?
Yeah, and I'm not like respecting these touch points necessarily. Like what I mean when I draw these kinds of channels is like when things is kind of above halfway, this is when you're selling them, and when they're below halfway, you're buying them. So it's not like this is gospel or anything. And I don't have too much discipline when it comes to how much I enter with at certain points. That really kind of depends on my situation at the time. But one of the things that I would like to note is that there is a very, very strong downtrend here, sort of beginning in October of last year, and we're on the weekly chart, by the way. And this isn't necessarily mirrored by the RSI, which is actually trending up a little bit. This is technically a bullish divergence in the ETH chart. Now, we don't really like this. Isn't really a good bullish divergence. It's like mediocre. The MACD doesn't really agree, right? The MACD is still showing agrees with the trend here. But what I will note is that it's a pretty strong divergence in the RSI and the candlesticks, right? This is a really relatively commanding drop, right? We're looking at a something like a 28% drop here, whereas the RSI actually shows a slight increase in strength or rallying strength. And what usually follows with these kinds of things is that you do see an impulse change in the market. And I'm not sure what that's going to mean here, but I think that the ability to come back into this channel is probably relatively high. Now, when that happens, the channel continues down here. So we're not saying necessarily it's coming back up to these levels, but I wouldn't be surprised if we end up back mid-channel here and sort of regain that 20%. But it's just interesting that it looks like Ethereum is winding up a haymaker here to sort of get back into the channel, but we'll see. Yeah, we'll see. There's no like on the monthly, for example, there's absolutely no reason to be confident at all. This is, if you have a look at the.
So how do you know which one you really want to look at?
Well, I mean,
like
data.
one you have a little bit of confidence, the other one you have zero confidence. So how do you decide how you're actually trading?
Well, we're just reading. We're still reading tea leaves here. Looking at
but
the.
as a
the
trader, like how do you make that decision? The liquidity.
Well, it depends on your time frame. So if something's looking bullish on the weekly time frame, then I will trade it weekly. The monthly time frame is very, very long. So what I'm saying here is that if you had been accumulating ETH,
how long is the monthly time frame? About a month.
Around about
somewhere around there,
give or take.
Who's counting?
But yeah,
like 28, 31 days, something like that.
But yeah, what I mean is like every time ETH approaches, like it's never really been overbought versus Bitcoin or oversold on the monthly time frame. But like it gives you fair warning. Up here was a really good time to get out of ETH, and the MACD told you to do that. And then it crossed. This was a really good time to get into ETH, and then it crossed again. This is a really good time to get out. But these take a long time. Like this sell point was back in December of 21. So that was your time to sell, and we're still waiting on that kind of time frame. So like a multi-year time frame, we're waiting for a good signal to go all in on Ethereum again. From a Bitcoin position, I just don't see that.
Have we seen that in the past though?
Yeah, we have. We kind of have. So let me go
right.
back
Like how many times have we seen that? There's like that
once.
No confidence in this.
We've only seen it once. Yeah, so back here in September, August of 2019, this was a like an all-in Ethereum signal. So actually it took a little while, but this was a pretty nice rally versus Bitcoin. And by the time the MACD crossed on the monthly time frame, you still would have been able to improve your position, 236% versus Bitcoin. That's a very, very, very nice, a very nice situation to roll in. But we haven't seen it again. The time to get out of Ethereum into Bitcoin was back in May of 2022, just before the entire altcoin market crashed. And we've just been waiting patiently for this thing to turn back around. We haven't really seen it, at least on that kind of time frame. But yeah, for the weekly, it's not looking too bad. So like from now until the end of the year, you can see we're crossing over here, and this might start rallying up again. We're at very, very close to oversold levels on Ethereum. So, you wouldn't even need too much of a rally here to see the price improve like 10, 15, even 20% versus Bitcoin. But, the opposite could also happen. It could just turn around, and like I said, there's hardly any market structure here at all. Versus Bitcoin, I think another 25% down is probably the next checkpoint. And then if we lose that, it'll be sort of 50% down versus Bitcoin, and who knows what's happening to Bitcoin during that time period. But yeah, short version is the altcoin markets, well, at least for Ethereum, are not looking too bad. I haven't been paying much attention to XRP or Litecoin. I usually do because it kind of gives you an idea of the weather in Bitcoin, but I haven't been doing that recently.
We've got 5-10 minutes left. I'm gonna bring Keith. Can I bring your chart back up? Your screen? I know you had Litecoin pulled up. Oh, we switched.
Yeah,
okay.
I can get there.
No, that's okay. Did you want to add to what Mark was saying?
No, I was just
kind of following along.
I was just following along to see what I had on my chart, and I don't have MACD on this chart, but I've also been showing a downtrend since back in June on that ETH BTC pair from Trend Precognition, and I don't remember when I laid this this support line here, or this RS flip line here, around 36 or 0.036, but that's a target I've been watching here, and it looks like believe it or not, despite the downtrend here, that we might be seeing an uptick. This is on the monthly. We could see an uptick after this month, right? November. If this orange A1 slope line crosses this blue center line, then we would get a long signal, but it could very easily revert from here too. So we'll have to see how that plays out. Litecoin I was looking at, Litecoin I think has been a sleeper for a long time. I
remember talking about Litecoin when we first started on the Twitter Spaces, before the live stream and everything else. It was something that we had spoken about.
Right. It's like it's like a sleeping giant. It's been around for a long time. It is, when I first got into crypto back in 2017, this was, it was Bitcoin, ETH, and Litecoin were the heavy hitters, and in terms of market cap anyways, right? And so I don't remember if it was top 3 at that point, but it was at least top 5 back in those days. And so obviously it's faded way back since then. But it also has, it boasts it boasts, lifetime of uptime with 0 outages and a high number of transactions, super fast. And we're starting to see some more money come into Litecoin. There was recently an application submitted for a Litecoin ETF. Now, if interest in an ETH ETF is as low as it is, what kind of interest is there going to be in a Litecoin ETF? That's a good question. I mean, can you imagine if the interest in a Litecoin ETF is bigger than an ETH ETF? I mean, that would be like the death of ETH. So
Keith, you're describing Litecoin almost like an investor, though. We always say there's a difference between an investor and a trader, right?
right. Well,
Like talking about its tech and everything else. I always see a lot of traders saying, like, don't marry your bags. A lot of them don't even know what it is they're trading. They see the Litecoin chart
I've been
and
waiting.
that's what they're trading, right?
I've been waiting for fundamentals to matter in this game since I got in this game, and I'm constantly disappointed that they don't. But I can't ignore it, right? I mean, it's like it's a
Yeah,
coin that's been around for a long time. It has some solid fundamentals, and it's not one that I worry about being a Ponzi and getting rugged. And
right.
so those are the coins that I'm willing to hold on to longer than say a SHIB, because or or the Liberty Financial or the Liberty Financial Ponzi, right?
We're saving it for the politics call.
Right. I'm not going there, and I'm not doing a politics call.
You're just gonna throw it out there every chance you get, and then I'm gonna say, moving on, Keith.
Listen. I own my guns and I speak freely,
Mm-hmm.
and I won't be giving either of those up, and I'm not worried about either of those things going away, um, regardless of who's president. Um, but in terms of the upside potential for Litecoin, I see a breakout happening, and I see a good potential upside, even if it doesn't go back to all time highs, even if it just goes back to the 200-week moving average. That's a 55% move. I'm happy with that.
And that's a nice range that you can trade.
Right.
That goes back a year and a half.
And the risk reward on this is good, right? So
or 2 years.
So I'm fine with that. In terms of, one of the things you asked me at the beginning was trading versus investing, and I really was talking mostly about my longer term position on Bitcoin. And so in terms of trading, I would be trading the range. I would be very, very reluctant. I don't trade leverage to begin with, so it's not an issue for me, but I would be very, very reluctant to put on a high leverage trade, because it's a matter of time. In my opinion, the breakout is inevitable. It's just a matter of time. What I showed you on fire charts, it is, in my opinion, not now, but that doesn't mean not ever. And so that's why I'm reluctant to, and I'm seeing, we're seeing the over leveraged trades get liquidated on both sides. It's like the game of ping pong. They squeeze the shorts, they go back and get the late longs.
I wonder what the rate of success is when trading with leverage. I wonder how many actually come out of trading with leverage successful.
Well, I think a lot of people do. I think a lot of people do, but the smart ones close their trades.
Yeah.
There's a Nobel Prize awarded. There's a Nobel Prize awarded for this called Miller-Modigliani theorem. And basically, the rate of returns on leverage trading is roughly equal to the rate of returns not leverage trading. There's actually no difference. Leverage doesn't actually give you anything.
It gives you something if you close, if you aren't greedy, and you take your gains, and you take the money and run, instead of trying to squeeze every last Satoshi out of each trade. So I like I said, I like support here in these moving averages here. I don't think, based on what I'm seeing in leverage right now, or estimated leverage, I'm not confident that this 2021 mid-cycle top is going to hold. And that is based on what I'm seeing on the Kingfisher chart, because here we can see that we've got some leverage down to that 64.4 level, and even down to 63K. There's, what's that, about 22 million in longs primed for liquidation, and we just in the past couple of days picked up some shorts here that are now ripe. But I think we could go get this and then go back and get this, or we could go back and get this and wait and see if more shorts build here, you know, the late shorts are the ones that are going to get punished, right? So, you know, we had a lot more recently, you know, as much as a week ago, and these guys were looks like they were smart enough to close, right? When they saw price pumping up at 69K, they closed. I think they actually closed once we got over 67. So, so in my opinion, this is, you know, these are ripe targets, and if those targets are hit, that would that would shoot through this mid-cycle top. But like I said before, it's these moving averages that I'm most most focused on in terms of support. I really like the 21-week moving average. Um, you know, and you guys mentioned something. I think we all mentioned something about the times that it gets boring when Bitcoin
Yeah.
is trading sideways and it's boring. Well, if you look at history, those boring times, those are the times to consolidate. I mean, to accumulate when we're in an uptrend like this, right?
I agree. I agree with that.
Those were good accumulation zones. Accumulation zone. Accumulation
Yeah.
and distribution. Time will tell.
Well, this is and that's the thing though, is that these historically these boring moments have not been near an all-time high, whereas they are today, which is I'm not saying that changes the
Well, but we
story
have,
necessarily,
but
but you
we
know what I
have to,
mean.
but we're in a point where um we've got to make a new all-time high, right?
Sure.
I mean, if
If we're going to anytime soon, it would be.
if we're going to, and we, you know, for those of us that subscribe to the halving narrative or the 4-year cycle narrative, everything is still intact. If you don't subscribe to those things, that's okay. All you need to know is that the trend is still intact.
Keith, you had a couple of community members who were saying that was it. They thought that you know, that was the end of the bull run. Do they still feel that same way? Have you guys spoken about that recently at all? And then I know we're at the top of the hour, so thank you guys. But
Listen, I think it's always good to have
opposing views.
different opinions in the group because
Yeah.
it makes us think. And I think the person you're referring to, I could say this: he's net long, but he's playing
Mhm.
short, right? And so he's in a position to continue to add short, more so than a lot of traders, you know, are able to do.
Yeah.
But he will, but you know, at this point, he will probably add short all the way up, just to build that longer term position for when the black swan lands. So I think for those who are questioning it, this is really the level up here that that they're looking for, is to take out this higher high at 72K.
Yeah.
Because the higher highs that we're making right now are still part of this downtrend, right? We're just digging our way out of this downtrend. We haven't done effectively yet, right? So we have from here a higher low, and here is our first higher high, and here's our second higher high. But we haven't yet taken out the higher highs that were, you know, initially part of that downtrend prior to the rebound. So we've got to take out this one. Then we got to take out these two are like $50 apart. And then we've got to go after the all-time high. So again, what I want to see is consolidation here, then break this, consolidation here, break this, consolidate, and break that. And the longer it takes, you know, I mean, I at this point, it's taken a long time, right? We're all ready for it to happen, but
Yeah.
I don't think it's time to. I don't think it's a time to get impatient. I don't think
I was just gonna say that.
serves you
Yeah.
well in this game.
Yeah.
If anything, it's a time to be patient. And if you're not comfortable trading the volatility that's there, sit on your hands. Know what your invalidations are, right? Know what your if you're short, know what your invalidations are to the upside. If you're long, know what your invalidations are to the downside. And unless those targets are reached, sit on your hands.
Yeah. Yeah. You guys are awesome. Thank you so much. I threw up Material Indicators website.
Thank you.
This is what we're looking at with the FIO charts and the actual indicators, right? Also going to, in the beginning of the call, we were talking about the simulator, a tool that, we showed I can't say last week, 2 weeks ago on our previous call, that Keith was saying that he actually played around with and used to kind of refine those ranges and things. This is part of Carbon DeFi, where you can go and back test any two tokens you choose to up to 365 days. So,
if I can just add, one of the eye-opening things for me on playing with that simulator was the difference in potential profits by actually lowering my my sell targets. Lowering my
versus trying to time the very top.
Lowering the sell targets, instead of trying to stretch it out to the top every time, to the top of the range every time. Closing it more frequently allowed me to turn more capital and exponentially increase the profits.
I'm so glad that you went and played with it a little bit, because it really is, when you can actually see that, and it shows, Mark, you created it so that anybody can go and see exactly when these trades are filled and things of the sort, right? So you can go back and see that this isn't just, it's using this real historic data. It's not like you just kind of pulled this and created it to show something, bullish. This is really an analytics tool meant to help traders and liquidity providers, both on chain, really, create this confidence in their strategy. And I can't say perfect it, right? It's so difficult. We don't have a perfect strategy every time, but at least improve it. Hopefully improve those results by playing with those ranges and things.
Yeah, it's cool. Definitely worth checking out.
Well, awesome. Thank you guys. You are both wonderful, as always. And to all of the viewers too, we were talking about alts and things might be boring with Bitcoin, and we're looking at Ethereum. If there are alts and we can look at them and kind of go over some things for any of the viewers, definitely leave your comments, because it's always fun to kind of see what others are looking at as well. So yeah, appreciate you both and all of our viewers, and we'll see you next Tuesday at 4 p.m. UTC.
Thank you, Jen. Thank you, Keith.
Thank you, guys.
Thank you, guys. See ya.
Bye-bye.